Hello traders, my name is Logan Silver with Funding Talent. Today, February 19th, we're going to be doing a live market forecast for you guys. And in this video, we're going to be diving in deep to the fundamental drivers of this upcoming week and the most important technical analysis on all the major currency pairs and indices that we can find. So, without any further delay, let's get right into the video.
All right, traders, so here we are on our slideshow. First, we're going to go into the news as always. As you can see, this week we do not have a whole lot of high-impact red folder news, but we do have a little bit. That little bit is going to be very present on Tuesday and a little bit on Wednesday. Tuesday is going to be when most of the news occurs, and remember, these times are in Eastern Standard Time. So, at 10 a.m. EST, Fed Chair Powell will testify. At 12:30 EST, the Bank of Canada governor will speak. At 8 p.m., a lot of NZD news, official cash rate, monetary policy statement, rate statements, and press conference. And then Wednesday at 10 a.m., again, Fed Chair Powell will testify. Besides for that, we do not have a whole lot of news this week. So, if you're short-term trading, I would recommend to keep your eye out for these times. Be sure to lower your risk and move your stop losses when news events are close to occurring. So, there's not too much this week for us to be keeping our eye on in terms of news. But Americans that were applying for unemployment aid rose last week to 861,000 as opposed to a forecast in the high 500,000s to early 600,000s. Also, before the virus erupted in the United States, unemployment benefits have never topped 700,000, even in the Great Recession in 2008 and 2009, which is quite astounding to think that now we're hitting 861,000, 160,000 above what we were hitting in 2008 and 2009. This factor is going to be contributing into the shift of market sentiment that we're going to get into shortly. As well as that, a little bit of news on the pound reaching $1.40, which it has not done since 2018. So, for our risk sentiment this week, as I was writing here, unfortunately, this could be the turn, not saying it is, but it could lead to a turn of market sentiment, which will lead into the risk-off territory, as we have been riding on a risk-on market sentiment for the last couple of weeks and months. But this is due to the last 2 weeks of negative news that we have been receiving regarding Americans' unemployments, the stock market, and also the vaccinations. So, we are experiencing delays in coronavirus vaccine shipments and deliveries because of the storms that were happening across the entire nation, but most prominently in Texas. So you can see here that the numbers talk for themselves. As of this week, I checked these numbers today. Right now, we have 73.4 million vaccines delivered, which is only a 5.1 million change from last week. If you remember last week's video, we saw a change of roughly 10 million from the week prior. So, vaccinations are definitely slowing down in terms of being delivered as well as being administered. So, this week is 57.7 million. Last week was 46.3. That's an 11.3 million change, but last week we were closer to 12. So not only are deliveries slowing down, but administrations are also slowing, which is not good news for our risk-on market sentiment, because you have to remember what it is, really. Risk-on market sentiment means investors are more willing to put their money into riskier assets for a greater return. That is when expectations are higher for further economic growth. But if there's so much negative news coming out, investors will be more likely scared to invest in riskier assets and therefore put their money into more risk-off assets, which perform better in these situations, such as gold, commodities in general, the Swiss franc, and the Japanese yen, which is what I wrote down here. So we will be looking for a potential shift into risk-off market sentiment, which, as I just said, means expectations are lower for further economic growth, and the pairs to be looking for long this week, if we do get that switch, is the Japanese yen long, the Swiss franc long, the US dollar long, as well as commodities, so gold, silver, things like this. So, with all this news out of the way, let's head right into the charts for our technical analysis. So, to start off, as always, we are on our DXY chart, which is the dollar index. So as you can see, last week I marked out this move for you guys. We were going to come down, retest the support fractal, and then move off higher, which is exactly what happened. Except around midweek of this last week, we did get a decline in the dollar, which came back down to this support fractal. So we could be expecting another push off or a break lower, which could signal prices moving down to this 89.2 level for our next support fractal. Again, as always, we are going to react, not predict. We can forecast these things, but we need to wait for confirmation before we make actionable trading decisions. So, we're going to wait and see if we bounce off of this level or break before we have a clear bias. USDJPY. As of last week, we were at this level right around here, and I said we could absolutely see this coming up and taking out for our fifth wave, which, as you can see here, touched this 2 level exactly from this first wave extension. This trade worked out phenomenally, and if you caught this last week, great job. I'm happy that I could have identified it for you, and I hope that it led to a better week overall. Moving forward, we did come down to retest this resistance fractal, which has now confirmed as support by bouncing off right now. So what we will be looking for is a wave to complete and then a B wave, whether that be a push higher or continuation of the A wave pushing lower and then another push higher. Until then, until we get a completion of our B wave, which will be the next retracement after this wave on this 4-hour chart, I'm not going to be making any decisions because I want to wait and see how we can play for a C wave. I don't like playing for corrections, I like playing for impulses, so that's why I'm going to wait. Moving on to EURUSD. So, as we spoke in the last video last week, I said that we were around this level. We could either come down and finish our head and shoulders target because we hit the first target here at the completion of this C wave, but there was another extended target for this head and shoulders right here to come down farther. But I said that what we could see is a completion of this C wave, a push higher, and then a retracement, which would be our 2 wave, and then a 3rd wave higher, which would be our impulse. So right now, I'm going to be having a long bias on EURUSD at least to this 1.218 level, and potentially higher all the way back up to our previous high here at 1.234. Moving on to BTC USD, last week I gave you guys these price targets for potential prices that we could be hitting on Bitcoin. As you can see here, we just hit this first level, and to be completely transparent with you guys, we did mark this out last week, and we did expect a retracement before coming higher. We did not get that because there was a lot of news this week in the Bitcoin market, so we just continued higher, which is great. If you played for a continuation trade, you could have absolutely caught this from the price around 45,000 to 5,000, almost 500 now. Again, great moves, and the next price that I'll be looking for is 68,900. It is potential that we retrace before that, as this wave is very extended and we're losing a bit of our buying pressure here. As you can see here, the candles are stronger, more buying momentum is behind them. Here we're starting to fade out in terms of buying pressure. Candles are starting to consolidate a little bit, but slowly moving up. So we're going to see if we can maintain our buying pressure and take us to that level at 68,900, but I will not be surprised if we get a retracement, as I just said. USDCAD. So we had a breakout of this early last week. In our last video, we were around here. As I said, we could see a push down to this lower fractal, which is exactly what happened. We pinned this fractal before coming shortly up. Now we are retesting again, and as of right now, we are divergent on the 4-hour chart. So what that tells me is we could expect another push off of this level, but it is possible, especially if the DXY analysis plays out, for this to come lower and break below this. If that happens, my bias will completely shift and I will be short biased on USDCAD. Until then, I am long biased and looking to see another push higher to this 1.24 level, or even higher to this 1.299 level. That would be our next resistance after this one. NZDCAD, I also was marking this up for you guys last week, this head and shoulders pattern, which is still valid. Not much to say on this pair. We got close to the neckline, but came up higher, and we might be retesting this high, but the head and shoulders will remain valid. So we will look to see what happens, and if our sentiment will shift if we break this high here at this head. But as you can see here, we are retesting this resistance line, so it's absolutely possible for this to be our reversal pattern and for us to come lower finally to this neckline and potentially break the neckline to confirm our head and shoulders pattern. So I do not want to shy away from making bold calls. We're not afraid of making bold calls as long as the confluences and the technicals line up, as well as the fundamentals. So, to line up with our potential risk-off market sentiment, I have identified a potential reversal in the S&P 500. Not saying that this is absolutely going to happen, but it's absolutely in the books and absolutely possible. So, as you can see here, we've been forming this uptrending wedge for quite a long time. We started this back in October of 2020, when we had this very strong push higher, pushing for highs at the 3600 level. We've been in a clear uptrend since with not a lot of retracements, but as you can see here, we are approaching the 1.72 of that previous wave, which is a reversal point, potential reversal point, and I can expect this to come lower from this if we continue to confirm this uptrending wedge as we did here again this last week. So what I'm going to be looking at now is a push higher to this 127.2 extension, and then a push lower. That would be the best case situation in terms of this analysis. But it's absolutely still possible that we come up and hit our trend-based fib extension at the 4,075 level and coming lower from there. That would be our extended take profit, and this 127.2 would be our first take profit. So overall, I'm going to be looking, and I am short biased due to our market sentiment and the technicals lining up. Whether that reversal comes now, once we hit this 127.2, or once we get to our trend-based Fibonacci extension, I'm not entirely sure, but I will be looking on lower timeframes to capitalize on whatever I find. EURCAD is setting up for a very nice potential reversal entry. As you can see here, we have a resistance line right here, and we are retesting the support fractal as well as being divergent on the RSI. As you can see here, price is pretty much around the same level, but we're moving up on the RSI. That is what divergence means. There is a disagreement between the indicator and actual price action. Divergence like this would signal us to head higher, which would confirm this analysis right here. So it's absolutely possible that we get a reversal off of this 4-hour support fractal, as well as a break. This break of this resistance line will be the confirmation for me to see if we are heading higher and to confirm my long bias. GBPJPY, we were around this area last week, and we've head higher. I said that we were going to reach this upper resistance fractal at the 14575 level, which we absolutely have, and we're coming to break through at the top of this level now. So if we break this level and we confirm it on the daily chart, I will be completely set on a GBPJPY long bias. Until that point, it is absolutely in the cards for us to get a reversal off this level, as it is off of the top. As you can see, price has been very divergent all the way back from the 15th until now. So take profit was hit last week. If you guys happen to catch that trade, again, a great job. That was 3 trades last week that have hit take profit. And we'll be looking to confirm our bias either long or short. So my main goal with this is to give you guys a perspective into what you can see on the higher time frames, so you can see on your system, whatever you're trading, whatever your methodology is. You can drop down to a lower time frame, whatever time frame you're usually trading on, and now that you have a certain bias on these currency pairs and these indices, you're able to capitalize on them. You can get the overall direction from these videos and then direct it completely into your live trading, where you can catch better risk to reward entries because you already have picked the bias, which can act as confluence for your trading decisions. So to wrap up our market recap, we're now going to head over back onto our slideshow to confirm our currency basket analysis. Our currency basket analysis is not exactly lining up with our risk sentiment, which it was the last 2 weeks, and we've seen incredible performance of the last 2 weeks. So I'm a little bit more hesitant heading into this week. That is not to say that prices were moving last week and now we can start to expect reversal because of our market sentiment, which is entirely possible and actually what I'm looking to see. So as of right now, this is what I see in terms of the currency baskets. The Japanese yen depreciating, the euro, pound, and Kiwi appreciating. There is indecision in the dollar currently, as I was showing you on our DXY chart. There's also indecision on the Canadian dollar, but there is signs of appreciation on the Australian dollar and signs of depreciation on the Swiss franc. But if we get a reversal this week and it lines up with our risk sentiment, what you will see is an appreciation of the Japanese yen, of the Swiss franc, and of the dollar. So we're going into this week with a good idea of what to look for, but no clear trade signals yet. Once the week starts to develop, we might be able to signal out and see what we can find from our analysis that we did today.
So I hope this video has provided some very valuable insight into what you can look for going into this next week. If you are not already following us on all of our social media platforms, be sure to do so, because we're releasing content every day, and on this YouTube channel, we'll be releasing these videos every week on Monday. On behalf from everyone at Funding Talent, as always, happy trading.